Hello, today is Friday, the 15th of February, 2008. This is Brian Shannon from alphatrends.net, and the market is closed. We had the S&P 500 finish with a loss of 3 cents, is what I'm showing right now. It's virtually unchanged here, but you can see we did have a little bit wider range than that. This market remains in the downtrend, and in short term, it's going to have to get above the 137.20 or so before we have a chance to run up to the next level of 140, and that's where we'll likely encounter this declining 50-day moving average if it can get above that. The key level of support here continues to be down near this 132 area that we've been focusing on, and looking at the 30-minute time frame, this is where we can see that 132 more clearly. This recent move, past the 134 level, they were looking for potential support today. Good to see that the market did hold 134, but at the same time, we've got it back below the 5-day moving average. The 5-day moving average is flattening out, and we are seeing lower highs and lower lows in the short term. So it seems to me as though a test is inevitable of at least the 132, and if that fails to hold, then it looks like we're going to head down towards the lows for the year, down near that 127 level. We are in a primary downtrend, and these consolidations will typically resolve themselves in the direction of the primary trend, which again obviously is lower. So continue to treat this market very defensively. Light volume today, especially for an options expiration day. Looking at the week, you can see we did gain a little bit, but no progress has been made towards any type of recovery here. There's no signs that this market is strengthening by any means at all. Looking at the 10-minute time frame, we saw again that's at 134 level, and it did hold above that and then rally late in the day here to come right to that 5-day moving average. But again, that 5-day moving average is heading lower, and we do have this pattern of lower highs and lower lows. So we have to be very careful. A lot of times these moves that come back up above the 5-day moving average and then fail will break down and lead to a larger sell-off. So 132 looms large for next week. We saw yesterday that we're seeing signs of distribution in the short term, and that continues to be the case. For the semiconductors, the SMH, we saw a nice recovery, little uptrend in here. The uptrend line was broken yesterday, and we've got the lower highs and lower lows. Market is also back below this 5-day moving average, and looking for maybe a test of right here. We were looking at we were looking yesterday at a move down towards 28.50. Closed at 28.52, so came right towards that level. And I said that breaking below 28.50 would likely lead to a move down towards the recent lows near about 27 and a quarter in that area. And this market, is another one of these markets that seems as though it's tracing out maybe some kind of symmetrical triangle, which would not be a good sign if it's to break below the lower trend line. That would be considered a completion of the pattern, which would then give us a price objective down equal to the height of the pattern minus the breakout point. So down here, down towards about the $25 level. So a lot of reasons to still be very cautious in the semiconductors. We've got a horrible downtrend in here, and if we take a look at the longer term picture, let's take a look at that 25 level. It doesn't look unrealistic. So continue to be very cautious in all these markets, obviously. The Russell 2000, according to my screen here, closed at $69.86. I was saying that I wouldn't expect to close right around 70 for today. Came close to that, but we did see a loss in here of about 0.5%. So once again, the mid caps or the Russell 2000 is the weaker group here the last couple days, and for the week, it looks like it closed just about break even or so. I'll post those numbers obviously to the website as well. But we do have lower highs, higher lows, so we've got that same symmetrical triangle taking form in here. The height of this pattern, if we take that and drag it to where it would break down from, would give us a price objective. If it's to break down, it would give us a price objective down near the recent lows, near that 64 level. So I've been saying that I wouldn't be surprised and would actually like to see a test of those lows. I think that it's still forthcoming. Obviously, the 73 level is the big level of resistance going forward, and we've got that declining 50-day moving average in that area as well. When we look at a 30-minute time frame of the of the IWM. We've been keeping an eye on this as what was looking like a head and shoulders pattern, then that kind of got broken with this higher high right here. But now we're back to this trend line being very important for next week. So taking out today's lows near 69 or so could be what precedes the next move lower, which I think we'd be looking for first a test of that 67.5 level, and then if that's to fail, then it looks like we've got a good chance of probably testing the lows that we've seen for this year. Let's take a look at, because we haven't looked at this for a couple days, but look at the VWAP since the Federal Reserve cut interest rates the first time here, 75 basis points. And then one of these days it did the other 50 basis points. But from that point forward, this is the average price. The average price has been about $69.60. So still no clarity as far as who has control since the Federal Reserve took action. If we take a look at the S&P 500 using the same VWAP, you can see we found support at that level today, and that's that 134. That adds a little bit of significance to it. As far as the semiconductors go, the average price right around there, and now we're going to take a look at the NASDAQ 100, and this is the only market that's below it, where people are actually losing money since the Federal Reserve cut rates, and that 44 level is about where that level is. We were looking for the possibility of a further breakdown if this market was to break down and hold below 43.50. 43.50 did hold so far, but it's still looking horrible for this market. We've got the 10-day moving average below the 20. They're both declining. The 20 below the 50 below the 200, and they're all declining. This is a bear market, and odds favor further downside. The volume has been real anemic here the last week or so. Yesterday we saw the first return of any volume as the market sold off, and then today the volume mysteriously disappeared. Options expiration is supposed to be a heavy volume event, but very little action in there today, and just a horrible mess. This downtrend in here continues to show that we've got the market back below the 5-day moving average. 43.50 is important for next week. Maybe we get a rally up to the 5-day moving average, then a failure. I think that would pave the way for continued test of the lows. Worst, best case scenario, but more than likely, looks like lower lows are probably still on the way.